live. Once again, it is Tuesday, and each and every Tuesday we talk you and your money. And I'd like to welcome back to the show Jim Griffith of Griffith Financial. Good morning, Jim.
Good morning, Rob.
Hadn't seen you in a while, Jim.
Man, you have been a busy bee.
I think you've been sailing the seven seas, there, Jim.
No, Rob, I've been working.
Well, Jim, we have a little tiger back here, so this is for our ice cream safari this weekend. And this is our mascot for the ice cream safari at the Jackson Zoo, and our flavor is birthday cake.
Birthday cake.
Yeah, so we want you to come on out.
All right,
weekend,
we'll
Jim.
be there.
All right, Jim, well, this morning we're going to talk about how trade wars impact the markets.
Absolutely.
Okay, so what exactly is a trade war, Jim?
Yeah, trade wars when you have a conflict between two countries with regards to how much trade is being conducted between those two countries. Primarily, that's imports and exports. What one country is buying versus what they're shipping out to another country. And that kind of affects the balance of trade. The war comes into place when you basically increase taxes or tariffs, if you will, on products that will be sold to the other country. You can also impose restrictions on the amount of products that you're allowed to be sold or purchased from your country. And you can also another tool would be to limit the access to goods and services, or just completely not allow products to be sold in that country. So that creates a lot of distension, if you will, between countries as well as in the markets.
Now, how do trade wars affect the economy?
Yeah, trade wars are very disruptive on the economy because they create a tremendous amount of uncertainty. Corporate executives do not like uncertainty in the markets. They have a plan in place that includes contracts that they've written. So when we have a trade war and all of a sudden you've got an increase of 15, 20% in tariffs, that disrupts their plans. It also disrupts the markets. And what that does is it causes a big uncertainty within the supply chain as far as prices go. So if you got to pay one price one day and the next day it goes up 25%, that's problematic. And what that could do is cause a great slowdown or in gross domestic product, as well as economic growth domestically, as well as on a global level.
Now, the name trade war is kind of scary. Are there any other bad effects of a trade war?
Oh, yeah. I mean, that's why they call it war. That's why they call it war. You can get everything from currency manipulation, and that's when one country will increase or decrease the value of their currency for their own benefit at that particular time. They may even come back and devalue their currency and leave it low so that if I can purchase a product from you for 75 cents and someone else is selling it for $1, very same product, very same quality, I'm giving you the business because I can get that at a much cheaper price. You also have some negative impacts on exchange rates, currency exchange rates. When you start manipulating currencies, you got exchange rates that are just going crazy, and it creates havoc in the currency markets. Products cost more for the average individual, and we'll touch on that a little more, a little further in the segment. And it causes a lot of market volatility. That's when you see the market dropping 1,500 points a day, 1,000 points a day. And that's primarily because most of the trading right now is done by electronic trading. So when you push a button, you've got a lot of hedge funds, pension plans, and moving money around.
Wow. Now, how do markets react to all those trade wars?
Markets are not good, and the primary reason for that is we have to keep in mind that if we go back before the Great Depression, you had roughly about 11% of the people that had money in the markets, and those were mostly the wealthy people. Fast forward to today, we've got probably in the neighborhood of about 75 to 80% of people that are in the market indirectly, and that's in the form of being in a retirement plan, a 401k, 403b, et cetera. So when these markets move, they have a tremendous impact now, not just on the wealthy, but on the economy overall, because most people have the majority of their wealth either in a home or in a retirement plan. So when these markets start moving, hedge fund managers start to readjust portfolios. You got a lot of rebalancing that goes on. That's what causes that volatility in the market. And you get great swings, if you will. So your 401k could turn into a 101k, just depending on how bad the situation gets. Hopefully, it doesn't get that bad. And as we say, there are really no winners when it comes to a trade war.
So, Jim, what should we expect going forward when it comes to trade?
I think we should expect the unexpected, considering what we have to deal with right now. There's a lot of uncertainty. I think that as we go forward, we're going to see some economic slowdown domestically as well as on a global level. And you're going to definitely see an increase in prices of goods and services, especially in the short run. Long term, this thing could turn out to be the best thing that ever happened. But in the short term, there's going to be some pain.
All right.
And I'll tell you what, let's take a look at a little video clip that I have here, because what it does is it shows you, we hear trade wars all the time, but we really don't think about the impact that it's going to have on the average individual. So let's take a look at this clip, and it'll drive everything home, because this is a serious pocketbook issue for the average person.
Okay.
People are freaking out about a trade war with China. But why? Well, the U.S. imports more products from China than any other country in the world, $505 billion worth of goods in 2017, while only sending $130 billion worth of products to China. This creates a gap of $375 billion, a large part of the trade deficit with China. In the time I've been talking, did you notice all the products in the room that are made in China have disappeared? Now, a trade war with China doesn't mean we'd stop importing these Chinese goods, but it does go to show just how much we depend on them. Let's rewind in case you missed it. For example, this TV. The U.S. imports $146 billion worth of electrical machinery and equipment, the most of anything we import from China. This includes remotes, laptops, and cell phones. Also, sneakers. We import $1.4 billion worth a year. And these umbrellas. The U.S. imported $113 million worth in 2017. And China happens to be the world's largest supplier of umbrellas. And the list goes on. One thing we export a lot of is playing cards. But the cardstock we print on is from, you guessed it, China. There's no tariff, but we still spent $120 million importing cardstock last year. So while these products aren't going anywhere, they could have some steep tariffs on them, which means our lives could get a little more expensive.
Wow, so every time I play spades, they come from China.
Chinese cards.
Even Uno, too?
The paper, everything. They're printed in China. The paper comes from China. They just sell them to you so they can make that money, and you can sit there and play your
Solitaire and everything.
whatever you want to play.
Great info,
$120
Jim.
million worth of it.
Well, Jim, tell everybody how they can find you.
You can get in contact with us at 800-361-6542, or you can go to our website at griffithfinancialservices.com and contact us, and we will get back with you within a 24-hour time period.
All right. Well, Jim, this weekend is a big bodybuilding show. I want you to be there, Jim.
All right, Rob. I'll be
All right.
there.
You look like you got a few little muscles there, Jim.
Yeah, I've been pumping that iron, Rob.
All right, we're going to preview that show a little bit later this morning. But coming up next, we got Dana Harley with Bougie Life. Stay with us. We're back after this.
Look at you.